Growth in Europe stalls amid lackluster earnings. Welcome to Market Insight. I'm Ludovica Brignola. According to the latest PMI data, business activity in the Eurozone slowed this month, just as a slew of companies in Europe posted lackluster results. So what does this mean for business activity in the bloc and for the European consumer? Well, to help answer all that and more, I'm joined by Zoe Gillespie, investment manager at RBC Brewin Dolphin. Thank you very much for being with us today. Zoe, so on Deutsche Bank, we are seeing the first quarterly loss in 4 years, right? Mainly driven by a litigation provision. Besides this, how would you judge the health of Deutsche and the European banking sector as a whole?
Good afternoon. Yeah, we had, as you say, the first quarterly loss they've had. And I think it's obviously for the litigation provisions, the big thing. But I think it also does give some showing into the property market. And they have said that weakness in the property sector has been to blame there. They've also said that they've had to make some more provisions for bad debt. But interestingly, I think that many of the other banks, the one sort of highlight was their investment banking division, which seems to have offset some of the losses. But as you say, it was a bit of a dark picture, and I think it's certainly a read through to the German economy as to the sort of health and wealth affairs of the bank.
Interesting, and we're also going to start hearing about the British banks tomorrow. We have Lloyds coming out, Natwest on Friday. What's your sentiment on the British banks' earnings?
I think the British banks have had really strong share price appreciations over this year. Natwest up 50%, Lloyds up over 20%. So it's been a good time for banks. They've benefited from higher interest rates, better net interest income. But I think for me, the one thing I'd like to see from Lloyds is whether we're seeing any weakness in loans, whether we're seeing kind of the upturn in loans and deposit levels as well, and bad debt provisions, if there's any, and any kind of provisions for that. And I think the same for NatWest as well is whether we've seen growth in deposits and loans, again, net interest income with potentially lower rates going forward, how they're going to try and increase their profits over that time. So I think we're expected to see lower profits coming in. I think that's anticipated, and things to look out for, things like share buybacks and dividends too.
What about EasyJet? We've been focusing on the airline industry as well these days. And after a post-pandemic boom and given Ryanair warning just a few days ago, what do you think is happening to the airline industry? And what does this also tell us about European consumers?
Yeah, I think EasyJet's numbers, I say the share price soared, excuse the pun, today on the back of better numbers. And I think certainly there was a 16% rise in pre-tax profits in the second quarter. They've also seen revenue being quite healthy. Revenue per seat was up, costs were up too. But I think interestingly from EasyJet, the decision to branch out into the package holiday side of the business to try and diversify has certainly paid dividend for them, because that's been the main growth area. We've seen a 42% uptick in that side of the business. So I think EasyJet had guided that the consumer still remains strong and they haven't seen a weakness in demand. And I think that has helped profitability. But in contrast to Ryanair on Monday, it was a much better set of some numbers. But I think a lot of it was to do with the diverse nature of the business and the package holiday side. But as you say, the consumer might start to get a bit more squeezed, and we have seen the post-pandemic rush of tourism. So it's whether that's going to continue. We see a bit of weakness going into the second half of the year.
Right, and European consumers have started feeling a little squeezed. And meanwhile, growth in Eurozone business activity stalled this month, as the PMIs showed. Why is that the case? I mean, what's happening on that front, and what do you think governments or policymakers can do about it?
Yeah, as you say, we have seen a slowdown in manufacturing. I think certainly the German PMI was the one for me that stood out, coming in lower than expected. And I think they've been feeling the effects of a slower economy. We've seen higher interest rates having an impact on the sector. So with the Eurozone cutting rates, whether it's going to be one or two cuts or more meaningful, maybe would be supportive of the sector. I think interestingly, we've seen the Spanish economy being stronger, with manufacturing growing there and showing positive attrition, and certainly their numbers too for services.
That's true. That was quite bleak. But outside of the Eurozone, British business activity actually picked up this month, bolstered by the fastest manufacturing growth in 2 years, actually, and the strongest inflow of new orders since April 2023. What's happening there?
Yeah, as you say, the UK economy seems to be certainly much stronger. And I think there seems to be a better feel-good factor around, and we've seen manufacturing being strong, and again, services continuing to be strong. So it's a real positive. And again, we've seen maybe from the start of things a good start for the Labour government as they come into power. But there seems to be certainly just a better overall picture and outlook for the UK economy, and we have seen that with better GDP numbers come through. So certainly strength in the market as we have had going into the second half of this year. It's like a much more optimistic picture.
Right, great analysis on the European economy. Zoe Gillespie and Brewin Dolphin, many thanks for your thoughts, and that's Market Insight. Don't forget you can watch more videos on Reuters.com.